Greetings to all our value clients. Welcome to GKFXPrime Analysis and Education YouTube channel. This is Alan Hong, market analyst of GKFXPrime. I'm gonna share my daily analysis for Monday, 14th of August in this video. So first of all, let's review the major market movement. The first instruments we are referring to the dollar index in 4-hourly charts. So the US dollar was lead against a basket of the other major currencies on Friday, down 0.33% at 92.99 as the weaker than expected US inflation data tempered expectations for a third interest rate hike by the Federal Reserve this year. So for the week, the index was shed 0.49%. According to Labor Department report, showed that US consumer prices edged up 0.1% in July from the prior month, and this was below the 0.2% increase forecast by economists. So consumer prices were up 1.7% on a year-over-year basis from 1.6% in June. The data was the latest in a string of weak inflation reading that investors worry will make the Federal Reserve more cautious about plans to raise interest rate again this year. So future traders are pricing in about 35% chance of another rate hike by December, and this was according to the Federal Reserve interest rate monitor tool. So the expectation that rates will remain lower tend to weigh on the dollar by making US assets less attractive to yield-seeking investors. As for the Euro-USD pair, the Euro moved higher against the dollars, with the pair rising 0.42% to 1.1821. So the Euro was bolstered after Morgan Stanley raised its forecast for the currencies, predicting it would reach the 1.25 level against the dollar early next year. As for the safe haven assets, the yen and the Swiss franc posted large gains against the dollar for the week and rising 1.47% and 1.14% respectively, as heightened tension between the US and North Korea sparked a flight to safety. So the US dollar ended flat against the Japanese yen, with the pair USD JPY at 109.19 after falling to a 16-week trough of 108.74 earlier. And the dollar also slightly lower against the Swiss franc, with the pair USD CHF last at 0.9616. So these currencies are often sold in times of geopolitical tensions or market turbulence because both countries have large current account surplus. Having a tad in commodities markets, the gold price was rose to a 2-month high on Friday, settled up 0.38% at $1,295 following a weaker than expected US inflation report that investors worried would delay plans for another interest rate hike by the Federal Reserve this year. So gold price is highly sensitive to rising rates, which leave the opportunity cost of holding non-yielding assets such as bullions, while boosting the dollars in which it is priced. So demand for the precious metal was also underpinned by increased safe haven demand amid the heightened geopolitical tensions between the US and North Korea. While the oil price was settled higher on Friday, with the US West Texas Intermediate crude price tagged on 23 cents or around 0.5% to end at $48.82 a barrel, but it still ended the week with a loss amid the lingering concerns over a global supply glut. So aside from the supply and demand, investors also closely follow developments in the US and North Korea standoff. So for the week, the West Texas Intermediate crude price lost 76 cents or about 1.5%. And according to the International Energy Agency, said OPEC's compliance with the cuts had fallen to 75% last month, and which is the lowest level since the deal began in January. So the bearish compliance data comes a day after OPEC released its monthly reports, showing production from the group rose further in July and led by gains in Libya and Nigeria, two members exempt from the cuts, and top exporter Saudi Arabia. So OPEC and 10 producers outside the cartels, including Russians, agreed since the start of the year to slash 1.8 million barrels per day in supply until March 2018 in order to reduce a global supply glut and rebalance the market. But however, so far the deal has had little impact on global inventory levels due to rising supply from producers not participating in the accords such as Libya and Nigeria, as well as a relentless increase in US shale output. So according to oilfield services firm Baker reported Friday that its weekly count of oil rigs operating in the US ticked up by three rigs to a total of 768 last week. So the weekly rig count is an important barometer for the drilling industry and serves as a proxy for oil productions and oil services demand. So in this week's Wednesday's minutes of the Federal Reserve latest meeting will be in focus as investors look for more hints on the timing of the next US rate hike, and the report on US retail sales will also be closely watched. Elsewhere, UK data on inflation and employment will be in the spotlight amid ongoing concerns over the economic fallout from Brexit. So as for the oil traders, they will eye fresh weekly information on US stockpiles of crude and refined product on Tuesday and Wednesday to gauge the strength of demand in the world's largest oil consumers. Meanwhile, traders will also continue to pay close attention to comments from global oil producers for evidence that they are complying with their agreement to reduce output this year. So now we're gonna review the highlighted economic data and events that on yesterday, as well as the focus data and events for today. So on Friday, the United States will release the inflation report. For core CPI, as for July, it was at 0.1%, which is slightly disappointed comparing to the forecast of economists. So as for the US Baker oil rig count data, it was show a result of 768, which added 3 rigs compared to previous. Okay, so as for today, we got only 2 data that released during the Asia trading hours from Japan and China. Alright, so the Japan GDP for second quarter was at 1%, which is much more better than the expectations, and the China industrial productions for July was at 6.4%. Okay, so it's much more lower than the expectations. So now we're going to take a look for technical analysis, and first instruments we're referring to the GBP USD in 4-hourly charts. So the pair is remain traded in an uptrend, but currently is still retracing. So a closure above 1.31100 is a signal for it to continue its uptrend, but otherwise closing below 1.29200 suggests to retrace more in short term. So the next target of resistance level we can refer to 1.31000 and next support level refer to 1.28500. So referring to those indicators, the both moving edge line was remained pointing downward and expanding following dive cross that formed previously, and as well as the MACD, the both movement line pointing upward now and pointing and expanding, and the momentum is growing above the level of 0. So these are the signals for the pair to move slightly higher in short term. As for the euro, the pair currently traded in an uptrend, but seems like losing momentum, so it is expected to remain ranging between 1.17200 and 1.18800 for short terms. So the price was rebound from the lowest level of the range and suggests to move higher in short terms. And a closure above 1.19100 is a signal to continue its uptrend and move further higher towards the next target of resistance level at 1.20000. Otherwise, closure below 1.16800 suggests to experience a short-term retracement period and fall further towards the next target of support level at 1.16100. While the Kiwi remain traded as downtrends against the US dollars, but the trend directions seems like losing momentum, so it is expected to be ranging between 0.72600 and 0.73200 for short terms. So a closure above 0.73300 is a signal to experience a retracement in short terms and move further higher towards the next target of resistance level at 0.73600. Otherwise, closure below 0.72500 suggests to continue its downtrends and drop further towards the next support level at 0.72200. Alright, so it was retraced from the highest level of the range, so in short term it is expected to move slightly higher and remain ranging between the range. Meanwhile, the Aussie was trading uptrends against the US dollar and currently is still retracing, so a price closures above 0.79500 is a signal to continue its uptrends and move further higher towards the next resistance level of 0.80500. Otherwise, closure below 0.78100 suggests a change for trend directions to become downtrends and fall further towards the next support level at 0.77600. As for the Japanese yen, the pair USD JPY remained traded in a downtrend, but seems like losing momentum. When referring to the MACD, the both movement line is across from bottom and pointing upward now, so this signals that for the pair to most likely higher in short terms. Okay, so a closure above 110.200 suggests to experience a short-term retracement and move further higher towards the next resistance level at 110.900. Otherwise, closure below 108.700 signals to continue its downtrends and fall further towards the next support level at 108.200. And as for the commodities markets, gold price currently remain traded in an uptrend, so a closure above 1293.00 signals to continue its uptrend, and the next target of resistance level will be at $1,300. For the oil price, the West Texas Intermediate in 4-hourly charts remain traded in an uptrend, but is still retracing, so a closure below 47.9 signals to retrace more in short terms and fall further towards the next support level at 47.2. Otherwise, closure above 50.40 suggests to continue its uptrends and probably will move further higher towards the next target of resistance level at 51.5. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.